We trade the way a typical pro would trade. The high probability strategy and that methodology, that's basically how a retail trader would trade, a day trader. And we all know that 98% of all day traders are losers. So why would we want to do what losers do? We don't. We do what winners do. All right. So that's why we trade what we trade, and we're trading it with the most popular index and collecting premium. The other way to make money besides arbitrage is also collecting premium. You go to any investment house or investment bank, and they have market makers on there, high frequency traders, statistical arbitrageurs, and they're doing all of that arbitrage. And then on the other hand, you have the discretionary end of the house, and those people are typically trading asymmetric trades and selling premium. And their strategy of choice for most people that I know of is the butterfly. So that's what we do. We trade the butterfly. Now, how do we get an asymmetric trade on with the butterfly? We do it by putting it out of the money. We don't trade it like you probably heard of. That it is not, I guess you could call it a market neutral strategy if you wanted to trade it that way, but it's a horrible market neutral strategy because you have horrible risk to reward if you put it on at the center strikes, put the center strikes at the money. It's same thing with the iron condor. It's the horrible market neutral strategy. So anyways, whoever heard of a market that was neutral? It's hardly ever neutral. So why would you do all your trades and wrap your strategy around every condition as if it were neutral when it hardly ever is? It's a rhetorical question because you wouldn't. So we don't. The market moves. Now, we don't know how much it's going to move. We have no idea. So what we do is we take our flies, our butterflies, and we put them out of the money, and we put them far enough so that it gives us a substantial asymmetric return. So in other words, we make our risk very small by pushing it way out and look for a debit. Typically, we put on a long fly. Look for a debit that is at least 1/10 of the width of that fly. And you might think, that's crazy. I know. But that's how they do it. That's how pros do it. That's how we do it. And we make money consistently that way. Now, you're probably thinking, okay, so the win rate's going to be pretty small, or it's not going to be what I want. I want 85, 90% win rate because that makes me feel good. Great. What's it doing for your capital, your bank account? You're losing. The win rate has nothing to do with it. Everything is about the returns. Everything. And by having small risk and huge potential returns, you have a much better chance at getting returns that actually are meaningful. You also have a much better chance at having small drawdowns because you're not putting a lot at risk, which means another thing that will give you another edge. And that is you can have skin in the game and you stay in the game. You're not going to get shooken off. Someone who trades asymmetrically isn't going to go on tilt. It's possible that they could, but then they're doing something wrong. Now, the other edge that we have, and this is the biggest one. This is the absolute biggest edge, and that is the process that we use. So what we do is we institute a continuous improvement process. Now, what does that mean? We do a continuous improvement process that is patterned after agile methodologies. That means that we break down our trading into small little mini projects. You can think of each day as a mini project. Each day that you trade, we record everything that we do in that day in a way that allows us to then aggregate that data for a retrospective that we do at the end of each week. And by aggregating that data and then analyzing it, we can see patterns of behavior, either good or bad, that we can fix. Every day we have a very definitive process. Every week we have an enveloping process. Every month we have another bigger process. So it's kind of fractal in nature. And each process has a loop. It loops back where we look at what we're doing. If we're getting off track, we identify what the problem is, come up with a solution, implement the solution, get back on track. And we do that continuously. It's just a continuous improvement loop. That's how you become consistently profitable and a professional trader. It's a never-ending process. Not something that you do haphazardly or every once in a while. You ingrain this process in everything that you do. You trade that way, and I guarantee you will be 1,000% more profitable than you are now, which is pretty easy considering that most of you are negative. And so if you go 1,000 times more than that, that's not saying much, but let's just say that you'll be consistently profitable and you'll be happier. Now, there's another component that helps you along with that, because putting a process on like that is great if you have the discipline and the mental fortitude and the desire to do something like that, and the ability to be able to look at yourself, look at what you're doing, and then be able to introspect your thoughts. Then you can make that process work. But most people can't do that. Most people don't know when they're getting off track or when they're going on tilt or if they're doing the wrong thing. So they need a coach and a mentor to help them stay accountable. And that's what I do. I help guide you, coach you, mentor you, help you stay accountable to the goals that you've set and the process that you've committed to. That's how you become a professional, consistently profitable trader.